Hello kind people of YouTube and welcome back to another video. Today I just want to talk about one topic, and that is the crash we have seen the last couple days. Now that is why I'm once again starting with CoinMarketCap. I'm not going to look at today's market, instead I just want to point out just how large that crash was. Now if we're looking at the front page of CoinMarketCap here and we see the 7-day graphs, we see every single one of the major cryptocurrencies saw a magnificent loss 2 to 3 days ago, where it just crashed straight down. We see this for all of the major currencies, some of them a bit less than others, but all of them experienced it to some degree or another. Now if we're looking at the total market cap, we will see the week view here as well. Within hours it fell from 205 million to 180 million, briefly even under 180 million, and is only now starting to recover the tiniest bit, now at 148, almost 145 billion. This is one of the biggest crashes we have seen this year. Not the first one, not the only one, but one of the bigger ones. We have seen something similar about a month and a half before. I don't remember the exact time. But when I made my video yesterday, I just openly said I do not know what caused this. So today I found a really good article that just collects all the different opinions put forward, and I just want to read that with you guys. I'm gonna be reading out a lot of this, but I am gonna commentate on it as well. So don't you worry about me just reading it out. But this one is relatively long, and because it puts forward so many individual opinions, I can't just skip the lower half like I usually do for my articles. But if you want to read it yourself, the link will be in the description. Let's get it started, and after that we're looking at some analysis for the short term. Why did crypto market experience a $27 billion wipeout? Experts discuss factors. Now we don't need the intro here, that is just what I just told you guys, but here's the first possible reason. And this one is by CNBC's Fast Money. Brian Kelly stated the confidence of investors in the cryptocurrency market declined ahead of the Bitcoin Cash hard fork and its civil war with Bitcoin SV. Now, I'm gonna assume if you're watching my channel, you know everything about the Bitcoin Cash hard fork, but let me quickly reiterate for some of you who might not be completely aware. Bitcoin Cash, which itself is the result of a hard fork from Bitcoin, or Bitcoin Core as some people call it now, had a hard fork on the 15th with a lot of massive infighting leading up to it. There were two major proposals, Bitcoin ABC and Bitcoin SV. Bitcoin ABC tried to improve the Bitcoin Cash code, pretty much getting it into the present, updating it, improving the code. While Bitcoin SV, which stands for Satoshi's vision, tried to bring it closer to just core Bitcoin, what Bitcoin used to be, the original code. And there was a lot of infighting there. It was kind of terrible. And of course, all the major exchanges and wallets and websites had to decide which of the two sides, if any, they supported. So this was a massive battle in the crypto world, and Bitcoin Cash, being one of the biggest coins, I believe it's number 4 right now, of course had massive impact. And here's Brian Kelly's quote. After some real quiet period, lowest volatility almost in Bitcoin history, all of a sudden today things exploded. So what happened? Bitcoin Cash, which forked off of Bitcoin last year, is doing a hard fork. Now when you do a hard fork, everyone usually agrees. But in this particular case, everybody is not agreeing. So we've got ourselves a crypto civil war, and that has people in the market concerned. And this is just going into what exactly happened here. Prior to the conflict between Bitcoin Cash and Bitcoin SV, Craig Wright threatened to conduct a 51% attack against Bitcoin Cash and gain enough power to mine invalid blocks on the Bitcoin Cash network to sabotage the protocol. Now Craig Wright, of course, the Bitcoin SV leader. So you see here the craziness. Someone pretty much just outright said, "I'm going to attack the ABC chain if that one is considered the superior one by most people," which is exactly what happened. Bitcoin ABC is considered the real Bitcoin Cash by most people now, with Bitcoin SV being something else entirely. But good thing, not able to conduct a 51% attack. And here Kelly's quote continues. People are concerned that both Bitcoin and Bitcoin Cash markets, their networks might slow down, they might not work as well, the software upgrade may not go through, or if it does go through, we will end up with some chaos. People started selling, that triggered stops, everybody got concerned, the entire market settled down. In my view, a very short-term event. So in Brian Kelly's view, and keep in mind here, he's a very well-respected analyst with his TV show, so people pretty much listen when he talks. I think he's putting forward a very likely reason here. Now, even if everything had gone perfectly, if there had been no infighting at all, if there had been no threats, this would have been a sensitive moment. Bitcoin Cash splitting into two chains. That is worrying for a million reasons. There are always issues around stability. There are always questions about which one will be accepted as the main one. And that will always lead to instabilities in the market, to people being scared. And a lot of people, usually what you see before a hard fork, is a lot of people buying a coin so they can get both versions after. It's essentially free money. But what seems to have happened for many people is they actually sold their Bitcoin Cash before this hard fork. Because they were scared. They were scared that something might not work. They were scared that the markets might not function properly. They were scared about the safety of their Bitcoin Cash tokens. And this was very worrying, and Kelly here puts that forward as the reason for the market downturn. And personally, I think it's very likely to be the, if not the only factor at play, that was likely the direct cause. Now, there can be other causes in addition, but this, I believe, is the direct one that resulted in the markets dropping. Now, there are other reasons why the markets dropped this low, or why we even had an environment where the markets could drop like that. So let's continue and let's look at some of the other reasons put forward here. CryptoRant, cryptocurrency trader and technical analyst, told Cointelegraph that even before the hard fork, Bitcoin hovered above an uptrend support. Its continuous retest of the level led this momentum and strength in the low $6,000 region to decline significantly. And here's his quote: "I don't think there's a huge conspiracy against Bitcoin behind the drop. Bitcoin has been hovering over a slight uptrend support. But we can see how every time that Bitcoin touched that support, it bounced with less and less strength while continuing a downtrend on volume. That points to a weak setup. What was seen as stability can be considered also as lack of strength to push new higher lows and define a stronger uptrend." So here he's essentially looking at the long-term movements of both the crypto markets and Bitcoin in particular, and you of course know that Bitcoin tends to drag the entire market along. And his quote continues: "The crypto market is still looking weak at this point. Uncertainty, I would say, is the main feeling right now. As seen by the low volumes everywhere, big traders and investors are still hesitant towards taking big positions given this scenario. One thing I would like to highlight is the response of large market cap cryptocurrencies against this Bitcoin drop. In previous scenarios, all major digital assets were dragged down with Bitcoin or dropping even further. But this time, most of them are holding their levels nicely. This is a great precedent for the whole crypto sphere. Alternative cryptocurrencies need to set their own path and cycles beside Bitcoin moves." See, this is a very important point, and this is something I've been talking about for a long time. The more that other cryptocurrencies can uncouple themselves from Bitcoin, the better for the health of the cryptocurrency markets. It is on the face ridiculous that any move in Bitcoin tends to drag along everything else, because usually those are issues with Bitcoin, and we see this sometimes with other coins moving as well. Of course, we have now Bitcoin Cash crashing, and a lot of people, me included, thinking that was the catalyst for this crash. So Bitcoin Cash dragging everything else down. We have recently seen XRP make significant gains and pulling the rest of the markets up with it at least twice in the last couple months. So Bitcoin is losing a bit of its effects on the markets. Sometimes coins can move independently from Bitcoin, while other coins are increasing their influence there. But I think this is also an interesting point here. Like, okay, Bitcoin Cash was probably the catalyst for this. But one of the underlying reasons this could have happened at all is that in the longer trend lines, we saw Bitcoin getting close to a level that it was testing, that it was pretty weak at, and that it was likely to fall below anyways. Now, if you compound those two things, you get a drop straight down. And now we have people saying a further drop is inevitable, but just wait a moment, I have other people saying something else after. Given the weakness in the market and the intensity of the daily drops in the price of major cryptocurrency, CryptoRant states that a further drop to the low 5,000 region is inevitable. He added that while the volume of Bitcoin has increased, it is not sufficient to demonstrate a bottom setup or trigger a corrective rally for a short-term recovery. In my opinion, a further drop is inevitable, with the next strong support and potential bottom in the 4,800 to 5,000 range. Yesterday's volume spike was acceptable, but not the characteristic of a bottomed setup. Don Alt, a cryptocurrency trader and technical analyst, also stated that if Bitcoin fails to recover swiftly to the $6,000 region, a further drop is likely. However, according to CryptoRand, one positive takeaway from the correction is that cryptocurrencies have started to show independent price movements with less dependent on Bitcoin. And here another quote from him. We will have to wait some more months until Bitcoin settles down its path through a potential reversal, but the alternative cryptocurrency market could take its own direction, getting rid of the Bitcoin influence. Yes, please! The big caps altcoin response has been amazing so far, printing the mentioned Dragonfly doji and the notorious spike on volume. And I was talking about this a couple days ago, actually yesterday, when I just looked at the markets for a moment. We saw Bitcoin actually underperform. We saw altcoins outperform Bitcoin while the market was dropping. That is pretty much unprecedented. Usually the common wisdom is that when the markets drop, Bitcoin drops less than altcoins on average. And when the markets go up, Bitcoin rises less than altcoins. So generally when the markets drop, altcoins outperform Bitcoin. Bitcoin outperforms altcoins, and when the markets rise, altcoins outperform Bitcoin. And now we saw the markets drop, but altcoins outperforming Bitcoin. That is pretty much a paradigm shift. That is something new. We might have seen that to a lower degree before, but it was quite spectacular in this crash. In the months to come, possibly throughout the first 2 quarters of 2019, Bitcoin and the rest of the crypto market could remain in their low price range. Rob Slimer, I probably mispronounced that, a Fundstrat Global Advisors partner, said that the consolidation period of Bitcoin following its 11% drop could take weeks to months. Prior to building a platform to initiate a strong midterm rally, Bitcoin will have to demonstrate stability in the short term. This week's breakdown produced significant technical damage that will likely take weeks, if not months, to repair to create a durable enough price structure to support a multi-month rally. So essentially what he is saying here is that don't expect the next major bull run until sometime in the later parts of 2019, because we're gonna need quite some time to just recover from this. And that is just for a short and midterm recovery. The analysis of Slimer echoed that of Willy Woo, the creator of cryptocurrency market data provider WooBull.com, who previously stated that Bitcoin will likely remain in a low price range until the second quarter of 2019. Before the market demonstrated signs of a major sell-off, he stated that technical indicators show a weak short-term trend for Bitcoin. And his quote, "The last reading of our blockchain and macro market indicators is still in play. What has changed is that NVTS has now broken its support, typically a sell signal." And here we have now the final part of the article. And this one isn't actually important. That is about investors' outlook for the long term, which we know is positive. We know any investor getting into the crypto market has a positive long-term outlook, so we don't really have to pay attention to that. But the takeaway from here is that people have widely different opinions, but what we can probably all agree on is that the trend line was already pointing downwards. That with the low volumes of the market in the last couple of weeks and months, a fall sharp down was not all that out of the ordinary. Now we're seeing minor recoveries now. But the catalyst, any which way you look at it, seems to have been the Bitcoin Cash fork. You had people selling off both before and right after it happened. We had people get scared, uncertain, all that infighting, that crypto civil war that people are talking about, those threats of 51% attacks, uncertainty about which exchanges and which wallets will support which version of Bitcoin Cash, if both of them will even survive. Right now it looks like Bitcoin ABC is the one that is surviving and the one that is widely considered the real Bitcoin Cash. But all that uncertainty, people were scared, people pulled their money out, and that, in addition to an already relatively weak market that was on a downturn, seems to have pulled together, rushed the market down. Now, we are seeing some signs of recovery if you're looking at this here. The worst seems to be over, and if we're looking at the daily, we see most major cryptocurrencies are up over yesterday, with XRP up over 5%, Stellar up over 8%, and Monero also up 5%. So we're seeing a bit of a pullback here. We're seeing market cap at 180, almost 185 rather than 179, which is the lowest it hit. So at least the worst of the drop seems to be over for now, but don't get too happy too quickly. As you have seen in this article, some people are predicting that if the markets can't recover significantly in a very short term, they will drop further below the $500 line, $5,000 line, which of course for Bitcoin would represent a massive loss over its high during the bull market in late 2017 and early 2018. That would mean it falling to a fourth when most people thought its bottom was around a third. So that would be rather scary. But let's look at some short-term analysis, and here I have an article from CoinDesk that actually has a more positive outlook, at least in the near term. Bitcoin charts suggest price bounce coming. If past events are a guide, Bitcoin could be in for a recovery rally in the short term. Following Wednesday's 10% slump, the leading cryptocurrency printed an intraday low of $5,188 before closing largely unchanged on the day at $5,580. The price swing formed what's termed a long-tail doji candle on the daily chart, which is usually taken to represent indecision in the marketplace. The fact that the candle appeared at the bottom of the recent sell-off indicates that indecision is predominantly among the sellers and could be considered a sign of bearish exhaustion. Potentially more interesting though is that throughout 2018, Bitcoin has witnessed corrective rallies in the days following the creation of long-tailed candles. Now, like I said earlier in this video, there is precedent for this movement. This is not the first time we have seen the price crash down straight and then recover. As can be seen above, the cryptocurrency created a long-tailed candle on February 6th and rallied to highs above 11,700 in the next 2 weeks. On similar lines, a long-tailed candle on April 5th was followed by a rally to highs above 9,900 soon after, a pattern that was repeated in June and August. You see arrow 1, arrow 2, arrow 3, arrow 4. You had this sharp drop and then it shot back up and actually got to pretty decent highs. And here as well, bing, boing, bing, boing, bing, boing. It is worth noting that the relative strength index was reporting oversold conditions on each occasion. Further, the low of the long-tailed candles has never been put to a test on the following day. However, the resultant corrective rallies each ended up creating a lower price high. And here looking at the long term, the above chart shows Bitcoin created a long-tailed doji yesterday. The RSI is reporting oversold conditions, so remember here exactly as the last 4 times this year. At press time, Bitcoin is trading at 5,540, up 6%, so the stage may be set for a recovery rally to former support turned resistance of $5,777. A break higher would allow a test of $6,000, a level at which Bitcoin had supposedly carved out a long-term bottom in recent months. However, the historical pattern may not play out if prices find acceptance below the previous day's lows of $5,188. A break below that level would signal a resumption of the sell-off. And their view, Bitcoin could revisit $6,000 in the next week or two, having charted a long-tail daily candle alongside an oversold RSI in the last 48 hours. The overall outlook remains bearish as long as prices are holding below 6,000. A close below the yesterday's low would invalidate the short-term bullish view and allow a drop to 5,000. And you see here, right now it's not looking like a drop, we're at $5,600. And you might wonder, why am I looking at the Bitcoin price so closely? Well, while its impact on the markets has been lower than usual, that impact was still there. As we said in the beginning of this video, everything else crashed down. So a Bitcoin recovery means a market recovery. And here, at least in the short term, the outlook is not that negative. Now keep in mind all these 4 previous instances. Every time after that happened, the new high was lower than the previous high. So this is part of a long-term movement down. But at the very least, it's looking like we might be able to avert a further crash here. And that we might be able to reclaim a lot of what was lost in the near term. And with that, I'm gonna end this video. I hope I was able to enlighten you guys. I'm certainly a lot more confident in my assessment of the situation now than I was yesterday. I'm pretty certain now that a combination of the markets in general being weak, pointing downwards, and uncertainty about the long-term prospects of cryptocurrency and Bitcoin, as well, that all of that was the background against which Bitcoin cashed hard fork with all the infighting, uncertainty, threats, and with all of that, was able to act as a catalyst to force the markets down significantly. Now, if they drop further or not, we are hearing mixed opinions, with some people saying we're going to see it fall under 5,000. But with other technical analysis saying there's a very good chance we're going to see the price bounce, if not quite to the level before, then at least close to it. And hope I was able to enlighten you guys. As always, all these articles are linked in the description. You will also find ways to support this channel if you feel so inclined, as well as my social media links down there. Thanks for watching, and I'll be back with another video either later today or tomorrow. I am kind of busy right now, so I don't quite know yet. Thanks for watching.